I'm going to the city and I'm gonna do a slimmy show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And we hope some great ideas and opportunities for you throughout the show. Well, in the stock markets worldwide, they were pretty much narrowly mixed and not a lot going on, maybe until Friday afternoon. Earnings reports had stuff moving up and down pretty dramatically, and I'll show you some of those as we get into the best and worst for the week. But really, the most interesting, maybe exciting event of the week, and that which brought the biggest move, was the news that came out Friday afternoon that the FBI has some more information as far as Hillary Clinton's emails, and they are reopening the probe. I don't think they've said anything yet about what the information is, but the stock market got really nervous about it, and a lot of the things that we saw moving reversed in direction, like all of the buying that was coming into the dollar, that might actually be changing now, as maybe the Japanese yen will be the flight to safety currency, as that one has taken such a big hit lately. And we put out something to our subscribers on the Japanese yen today. So there's been some changes in here, and certainly the stock market taking it on the downside, moving from a pretty big gain to a pretty big loss on that news. Now it's bounced again, getting it up to about unchanged on the day. As far as the futures go, the indexes are down a little bit. So it's not big yet, but stay tuned, because there could be something big happening in here. So U.S. stocks, we'll call them at this point, really mixed on the week. The real news, when you look at the indexes, if you're a technician, is the Russell 2000. That's notably weaker, as the third tier, in other words, the stocks that are the most speculative, seem to be getting sold. And that's one of the legs that held up this market, as the Russell was stronger. Now it's turning weak, and it has a breakdown. I'm not going to show you that today, but if you look at our Future Speak show on Wednesday, you'll see that, as I highlighted that as what looked like it was bringing risk into the market. The biggest changes might have been the bond market. This has been a quiet week in stocks, but it's been quite a week as far as the bond market, led down by Euro bonds. I've got more to say about that in a couple minutes. Our 30-year bonds down about 3 points on the week, so they have been getting hit pretty good, and we did expect that to come, and thanks to all the people that wrote me about the great trade that they got there in the notes that we put out earlier in the week. So the dollar, which had small gains for the week, now has turned down, so it's given that up, and we think it's going to correct some more in here for a brief period of time maybe, and that could be stimulated more by this uncertainty around the presidency around this election coming up. Gold, silver, they had tiny advances for the week, and then picked up some more gains as the news came out. Also, we still think we're in a period of some sideways chop in there, while the intermediate patterns get ready to have, well, at least a more significant bounce on the upside. Talk about that also in the short-term view. Oil fell more than $2 as doubts start to arise about the OPEC nations, the other producing nations, actually being able to put on a freeze That is a weakening market in there. But again, the big focus has really been on the bond market, and it's been pretty worrisome. There's a lot of things to look at out there. I'm going to show you a chart right now just so that you can see what the BWX looks like. This is the Euro bonds, and take a look here at this chart in BWX. There we go. And this is a daily chart, and I want you to just see the downward acceleration that's been going on in the Euro bonds. Pretty interesting, isn't it? Especially when you look here at this head and shoulders pattern that has been forming in here, right? So you see the head and shoulders pattern in there? Well, here's your left shoulder right here, right? See that one popping up? No, you don't see it popping up because it's right in here. And here's your here's your head right there, and here's your right shoulder right there. And you can see it's breaking underneath that moving average. So that says to me that this breakdown here is important. Notice the negative momentum, and look what these Euro bonds have been doing is they just move very, very significantly to the downside. So I wanted to show you that chart because, well, it's so important to this discussion about the bond market, which around the world has really turned significantly weak when you think about the Great Britain, about the UK, the Brexit. The British pound's been getting hammered, right? Bank of England says that, well, they're staying with their QE. They must have some position losses in there, I would say. And what the gilts in there, they had a day where they jumped by 6 basis points. So the British bonds getting hit very, very hard. Interesting side note about that. When the currency drops a lot, that means they're going to have some inflation because their currency buys less, right? Apple has raised the price of Macs in Great Britain by 20%. So they're now getting hit with an inflation issue based on the weakening of their currency. So, the U.S. central bank, they say that the QE is over, right? But they're still buying bonds because they want to keep their balance sheet at the same level, because if it fell, that would be draining. Bank of Japan, ECB, and they all still have QE, and they're buying a lot of corporate bonds too. Here's some interesting stats I'm going to share with you. As of August, I don't really have any later stats. The amount of government bonds that were out there in the world was about $40 trillion. That's a lot, right? Nearly 1/3 of them were at a negative yield. Can you imagine that? If you were to bring all of those up to about zero, in other words, the yields were zero, so no government bonds were yielding negatively around the world, the capital loss in the bond market would be approximately $4 trillion. So just getting to the zero mark is going to bring some annihilation to the bond market. Negative wealth effect, that could be very, very negative for asset prices all around the world if we get into that essentially bubble bursting. Imagine if we got to half of normalization, like a 2% Fed fund, or 3.5% or 3.5% 10-year. I mean, the bond market will have some major losses in there. By the way, Europe, as far as corporates, they're buying corporate debt also. There's about $500 billion in corporates out there in Great Britain that have negative yields. Can you imagine that? Even heard that a 50-year got sold at a negative yield. The question is, who buys these bonds at negative yields? Remember, if you buy a bond at a negative yield, when it matures, you get back less. So you got to say who actually buys these? Well, governments are buying them, right, to keep interest rates low, to make us feel rich, to think that this economy, which has been expanding, 2.6% was what they came out with today. that it's real when it's not real. It's when you have 8 years of 0% interest rates. Nobody knows what the real growth would be if you had some normalization. So it could be a lot less than that. So, of course, institutions and funds, they also buy these negative interest rates. Well, there's a couple of reasons that they would do it, to buy those bonds. They'd either buy them because, well, they think interest rates will get more negative, and that could only be in a recessionary situation, right? When things got really bad. So that would be bad, and certainly bad for stocks. Or they believe that there's nowhere else to put the money because the stock market, which is this dark cloud and what the real valuations are, has too much risk. And we've seen a deterioration in earnings and earning power, and money going into M&A to hold things that do hold things up, valuations. We've seen a lot of that recently because money's so cheap, really, so that they could do it. So between financial engineering and M&A, I mean, the valuations of the stock market, well, we don't really know what they're valued at, right? Because we don't know what real earnings then would be. So the truth be told, it's that the bond market may really be telling us there's a lot of trouble out there, and institutions, they don't want to buy stocks. They'd rather buy bonds at negative interest rates. Think about that. There's something sick out there. So what happened this week in the stock market? Well, let's take a look here as we look at our 60-minute chart of the S&P 500, the ES, and you'll be able to see in here that there has been a lot of chop in the market, certainly. And what you want to look at here is that on Monday we had a strong overnight rally. You see that rally in there on Monday? And then what happened? Well, it couldn't really hold. It got choppy in there. The overnight rally has not really been able to hold up really that much lately. You see one right over here that the market failed, and one right over here, and actually one right over here. So the market has not been able to hold these overnight rallies, and it got choppy here on Monday during the day. The white area is the trading during the regular trading session. Tuesday, we saw weak oil and earnings weigh on the market. Here's those, I talked about the industrials, or I will talk about them later on. And Triple M, Whirlpool, GM, Cat, they all weighed on the market. Goldman Sachs came out and said that they're lowering earnings expectations again, and that weighed on the markets in here on the downside. The Wednesday comes, overnight the markets were weak on Apple's guidance, which fell. Boeing came out and gave the Dow a big pop, and then you got that pop on the upside there, but that gain couldn't hold very well either. Thursday the story was the world bond markets, as those gilt yields exploded, and I showed you that chart that the European bonds have been under a huge amount of pressure, and what we saw in here was stocks selling come in, and they were basically weak all day. A midday pop could not hold in there at all. Friday, we get the better GDP number, 2.6%. Bonds moved on the downside, but then came back. And even with the stock market having a drop later in the day, bonds could not put on much of a rally. Amazon disappoints, but Google's earnings were good, but Google doesn't do a very good job of holding on to that rally, up a little bit on the day. Here, coming to the end of the day, we think it's going to pull back pretty significantly in Google. So we've been a Google bear as it makes a broadening top. Take a look at that on the weekly charts. So U.S. stocks had a modest gain, but then look as this FBI news comes out that they're going to reopen the probe on the Hillary Clinton emails. We don't know what they have, but they've got something, and it's big, and they wouldn't do this with 11 days to go to election without having something significant. So don't be surprised if you see some big selling coming in here in the stock market pretty soon. We're going to talk more about that later on. So what comes now for the rest of the week, for the coming week, is our calendar right here. Earnings reports still coming out on a pretty heavy basis. Big ones they'll look for Wednesday afternoon is Facebook. So that may be one of the biggest of the week. You get after the close on Thursday, Starbucks earnings also. And with coffee really strong, Starbucks may actually disappoint and be in some trouble. So I wouldn't be surprised about that at all. As far as news coming out, big news day on Wednesday, right? The ADP comes out in the morning, and then the FOMC announcement comes out in the afternoon. And then on Friday, we get the employment situation right there. So we're going to be getting some sense for whether or not the Fed has got something to say about the potential for an increase in rates. We don't think it'll be before the election, right? But we do think that it's likely that they indicate something's going to happen in December. That is, unless this market takes a big hit because of this presidential election and what could be some shocking news coming out there. All right, that is it for our opening segment, and I'll be right back with the best and worst stocks for the week. For the best of the week, even though there was not a lot going on in the markets, well, until Friday afternoon, there was some big movers, best of the week and for the worst of the week. We're going to look at 10 of those right now, really quickly buzz through them and get a sense for the condition of each of these stocks as we look at our cycle analysis. So take a look here at NCR, the big gainer of the week, up almost 14%. Pretty good gain as you see in there. Our analysis in here showed a low due well in a few weeks. This is an early bottom, which is bullish. So we call that a week one up. That's a really strong upside move that you see there. And that is suggestive of the fact that this thing pulls back in here. Maybe the market helps it, that it is likely going to be a buy. So NCR beat on earnings. Analysts like it, and so do we. So next one we're going to look at is Western Digital, WDC. This is one we were bullish on. Was a little bit concerning that they had this evening star pattern in here, and that may be just a sign that that area around 58, 59 is just too much for it right now. This one and Seagate STX, which lagged this week pretty badly, have been in decent patterns. We think that these are going to stall soon, give some correction. Earnings was beaten. Analysts really like it. So you can see that we think it's good long term based on our projection, but maybe the next 4 to 6 weeks in some corrective phase, and then after that moving to the upside. So we'll look for an opportunity in that one. FFIV, that is F5 Networks. Look at that level that it just popped up to. Gains 13% on the week. See the high here and the high here and the high here? Well, they say triple tops never hold. Reason is because if it's got all that energy to get up there again, it's got all the energy to go through. We think it's going to go through and then get into some correction. You can see we have it drawn that way. Really good earnings, guidance really strong, and the analysts liking this one too. So gets a big pop and probably in an area of resistance. Similar pattern that we see in here. We had this engulfing pattern that simply failed. In Juniper, earnings they beat on this one, and we think this is going to correct down. Cisco is in correction, same kind of a group. Ciena kind of negative. So can this one make it all on its own? I don't think so. I think we're going to see a month of pullback here in Juniper also. Some interesting news in Baker Hughes. This is up 10% on the week. Look at that pop in there, as there was some talk that GE is in talks with them. Now, GE says they're not going to buy them out as far as I read, but they're more likely to do some partnership. So we're going to look for a pullback in there. Take a look at the daily chart in here, and note the unusual pattern right here. That's a abandoned baby right at that 89-day moving average, and that's right over here is where the slim ribbon got positive. And look at this move in here. So beautiful double gap on the upside. I don't think GE is going to be taking the big gulp on this one. I would say that this one probably gets some kind of a pullback also. Got to say that it was kind of in a nice pattern and just explodes to the upside. Baker Hughes in the drilling category, most of these stocks don't look quite as good as this one looks like, so we're going to look for it to pull back some after the dust settles on this news. FCX. Now, this one I'm liking. Here's what I like in here. First of all, earnings for the first time in a long time were profitable. They had a profit. Now, you could see in here this big inverted head and shoulders that's been forming that it didn't break out from, and it has not broken out yet. Here's what I like in here, and that is the cyclical rhythms. In other words, this declining phase in the rhythm. You could see the declining phase here and here. Look at how it brought the declines. And then the rising phase and the rising phase, and here is the rising phase. Note copper in a rising phase that begins in a week or two, and the DBB, which is the base metals, in a rising phase, which begins in a week or two, and then this in an upside mode. So I would say that FCX looks really good in there, and I think that given opportunities, I would be buying that one too. Next one we'll look at LMT. Now, it doesn't matter who wins this election because both Hillary Clinton and Donald Trump say they're going to be spending money as far as the defense category goes. So this low came right on time. This is our timing spikes where it says that decline ending and this rally coming. You can see that right there. Earnings beat, revenues really strong, and week one in the advance. That means given some opportunity where the market falls and this pulls back, this is one that you want to buy. Other stocks that moved in here on the upside, Skechers up 9% on the week. This is a bounce that we think should be sold. We've been really negative on it and right. ConocoPhillips up about 8% on the week. That stock has been going nowhere, and we don't think there's a lot of potential in that one on the upside either. They lost money, 66 cents. I can't figure out those earnings. They're just absolutely hard to read and crazy. But again, on the weekend, I don't think it's going anywhere. Royal Caribbean up about 5% on the week. Their earnings were good. I've been on their cruise lines. Actually pretty amazing when you come to think of it. I'm suspicious about this rally getting up to the 74, 75 area. I think it's going to pull back to about 68. That's it as far as the best of the week, and I'll be right back with the worst. For the worst of the week, got a bunch of them here too. Starting out with a steel stock, a little one, ATI, Allegheny, as their earnings showed a bigger loss than expected. Take a look here at ATI, a steel stock, and follow a bunch of these steel stocks. And this one is the worst of all the patterns in there. As you can see, we have marked in here what says cycle breakdown. Let's take a little closer look so you can see what that means. Essentially what it says is that you get these smooth rhythms of advances and declines. You see that? So it goes up, it comes down, goes up, comes down. That's actually bullish. It's supposed to take out this high, but can't. It basically tests it and then comes underneath this last level. That's a cycle breakdown. Points to a decline way out here into the beginning of the year. So that's a bad one. U.S. Steel also is a bad one, and I would say that letter X is a short side candidate. Under Armour down 17%. ATI was down 23%, but UA has this giant decline in here. It's an earnings nightmare. I mean, their earnings really missed, and they really guided lower on their growth. So here you could see, again, the cyclical rhythms in here that suggested that this was in a declining phase, that small pattern and that bigger one right there. And it broke down underneath this level right over here, which was the 89, the 34-week moving average, and that just sent it skidding in a big way on the downside. Note it's at a major 50% level right there, which should give it some support. Take a look at the daily chart in here, and you'll see the damage that was done. As a matter of fact, a little closer looking here, and you could see, to us, we look at momentum all of the time. We have several ways to read it. That's where the slim ribbon, that's these three lines right over here, gave us the negative signal, and you can see right in here it remained negative all the way. That was way up at 39, trades all the way down to about 30 right over here. Breaks through all the supports until it got to the weekly support. You see the note here, see support on the weekly, and that's that level where it's trading at right down over there, the major 50% in Under Armour. So it should get some support here, but overall a disgusting pattern that says it goes down through late November or early December. Cardinal Health, which is in this healthcare category that Hillary Clinton has been so after, and now that there is some possibility that she doesn't get elected president, we might start to get a bid. Notice some pop here as it came off of that 63 low today. This is still a negative pattern. It looks like it has about another month to go in Cardinal Healthcare. Analysts really talking about hard competition in this group. And even Trump's policies aren't necessarily that good for the healthcare category because he wants to create so much more competition. So that's a bad-looking pattern in there. PAAS, which is a stock in the silver category, Pan American Silver. Note it was in my best 12 for 2016, and look what it did. So where have we been now? We've been in this corrective mode. You see that? That's beautiful, right? So it gets down right over here. It starts to bounce and then pulls back pretty sharply, tests the low that you can see that. We think a low is forming in here. Note our projection pointing on the upside right there. This one, Canaccord, came out bullish on silver stocks, but said this one was a hold. Actually, Pan American, PAAS, we have it as a buy. We have it as a buy now. Chipotle CMG, more disaster for this stock as it's moved all the way down from close to 800 all the way down to 362 this week. Their earnings were a giant miss. Their analysts are downgrading it all over the place. We had it in this period where we believed it was going to get a little bit more negative for about another month, but look at that as it breaks down underneath these key lows. Selling says it comes into December on the downside. We would sell any rally in here for traders as it looks like there's more coming. GT, Goodyear Tire, look at this downturn right here, 10% on the week. We think it's down in through November as they had a sales miss. Earnings were about as expected, but sales looked weak. Pandora, this is one of the stocks of the several that we've been warning about we thought was going to get hit hard. Why is that? Well, the competition from Apple is just mounting. There's lots of other competition out there. It got this big rally over here that we thought would roll over into this period. It's got another week or two that we think is going to be on the downside. Getting down to this level right over here is negative. You see we're looking for it to get a little lower, get a crummy bounce into this resistance area, and then go below $10. That's really what we're looking for in the longer term. We think Pandora doesn't have much chance of competing in this world against the big boys. Amgen, AMGN, down 10% on the week. You can see that massive decline. Now, I want you to see, we had it in this declining mode, but no idea it was going to take out this low. This is a very negative cycle for Amgen. It's configured negatively now, as you can see, and that says that, you know, sometime in the next couple of weeks, you probably make a bottom and then move up right here, but then move down again. We could see this stock bouncing, you know, maybe from 135, 140, all the way up into the 150s, but then giving it up again on the downside. The industrial type stocks have really been showing difficulties also. Take a look here at Whirlpool. This declining phase that it's been in, see this decline, that's the minor cycle. This is the more dominant cycle pushing down. When you get two of them pushing down, look what happens. Look what happens. I mean, you get into these long declines. This one ending thing. When they end, they get a bounce. You can see that right in here. This bounce lasted 4 weeks and failed. We're actually looking for something like that right over here. When it makes its low in the next couple of weeks, we then see a bounce coming and then moving down again. When you look at the industrial types, Triple M, they had an earnings miss. Honeywell, they had a rough time of it a few weeks ago, so they're this category not looking great. And the last group that we're just simply going to talk about is the airline. Southwest Air, that's a love, was down 4% on the week as their earnings and guidance both missed. And JetBlue down about 6% on the week, same thing as their earnings missed. We're looking at Delta, United Airlines, American Airlines, all three of those having rallied stronger than the rest of some of these other ones. We think they're about to have a pretty good pullback also. So I would be a seller of the airline stocks in the pop that we're seeing right now. That's it for the worst of the week, and I'll be right back with the short-term view. All right, before I bring the short-term view of the coming week, just want to tell you, excited here now, our workshop is now ready and it's available on our website. I've taken my 42 years experience as a trader, plus more than 2 decades as a coach, mentor, facilitator, and combined that to an amazing a number of lessons over a 6-video workshop. It's, I think, one of the most unusual workshops that one can take. What's unusual about it is that we don't talk about trading method. We don't talk about the winning system. This is about you. This is about me. And this is about all of the aspects of how we engage in the markets at a personal level and at building the plan, the right formula for you, been able to look at the psychological aspects that may be holding you back from being the best trader that you can be. This is an amazing workshop, and I really want you to consider taking it. It's amazingly affordable also, 6 videos, lots of worksheets and processes and ways for you to make discoveries about yourself and about your trading that you never really believed could happen for you. I think it's great. Please go to our website, go to the front page, go to the bottom. You will see a puzzle piece that says 5 essential building blocks to successful trading. You can click on that. It will give you all of the information in there. And if you have any questions about them, write to slim at askSlim.com and I'll answer you pretty quickly on that. Please consider that, because I know the kind of things that I've learned and I'm sharing in there, because in 42 years, I've made most of the mistakes that you can make, though it seems like I can still make them. And there's just a ton of learning in there, and I know that you will be much better for it as a person and as a trader. So go take a peek at it. All right, now our short-term view of the coming week. This has been a amazing Friday, actually, with the movement that's been in there. It hasn't been that huge, with S&P's up 10 and down 10, but the news behind it is pretty significant. We've got a blow up now in implied volatilities, and what potentially is a lot of risk out there in the coming week. I'm going to show you that when we look at the S&P 500. And as I was recording the earlier parts of the show, I didn't really know what the FBI news was. Now I'm seeing things come out that are saying that new emails have been discovered and somehow related to the Anthony Weiner sexting and research that was going on there. So I might not have all of the perfectly right information in there, but we do know that there is a new probe opening up and the markets are reacting to it, and this is going to be an election like no other election we have ever seen. So let's take a look now as we look at the 5 markets that we're looking at. First, we take an accountability of how we did in the previous week. 5 major markets. We're looking at at light crude. We're looking at gold, the euro, the treasuries, and the stock market. We'll take a peek at implied volatilities in the VIX also. I'm going to give us a rating of about 65 to 70% this week. Again, pretty much matching what we did last week. We had a miss in the gold market, actually, as we thought it would be a down week, and there really hasn't been much in the way of upticks in there. We got the euro mostly right. It's done better here on Friday, so we're going to get about half credit on that. S&P 500, we get about half credit. And then we got the light crude market and we got the bond market really, really good. I'd say we nailed both of those markets. So let's take a look here as we look at light crude. In the daily chart, all of our short-term work is done in daily charts and intraday charts, but our analysis is on here, and that's what I share with you. So what happened in here is that we were looking for light crude to be in a corrective period. We said another week when rallies fail. We got a rally attempt in here and it failed, a rally attempt right over there and it failed. So that's pretty much what we have been getting in there. Our expectation was that it would be a down week. We thought that it would get down to about 51.60 was what we thought that the high would be. It didn't quite get up that high, and what we thought was that, well, the high was right over here actually, about 51, and then we thought 49 would be about the lowest level. It nailed 49 right over here, then got a rally that failed, and now it's gotten below there. So where we are right now is this pattern in here pushing down. You see that? That's what's not letting these rallies go. And with this background news of potentially not getting this deal with the OPEC and producing nations, there's a lot of selling coming on in there. So we've lowered our expected range in here now. We think it's still risk and going to be another downside week. Note that 7-bar low. This could be 9, or this could be the whole rally. So we think if we get a rally in here, it stops in this area, doesn't really get much above that 49.80 number, but and then turns down. If we've had the whole rally already, then we have a whole week on the downside. Either way, what we think is that any attempted rally in here will fail, and that we will see something maybe in here of a blip and then down again. We're going to look for a low potentially of 47.80. That's that 50% number there on the minor support. This is about 57.50 on the 89-day moving average. So that's what we're looking at as the potential downside numbers. We think it's going, the risk is still here, and it's going to be another week where rallies fail and probably a downside week. The gold market we thought would be a down week. We thought it would get down to 1238 again. The reason for that was that we thought this low was going to get tested right over here before this was over with, and maybe broken by a little bit. It didn't do it. It actually broke above this triangular formation and then moved to the upside. And then when this news came out here about the FBI probe, you got another pop in there. So we're going to look for the potential for some more upside. We also think the dollar is going to give some more ground. We're going to give gold a small up week in the coming week. We think it's still going to be in a somewhat of a tight range. 1262 is the downside of the range that we're looking at, and then 1300 is the upside. So, a $38 range in gold is not really that big of a range, so we think it kind of will be stuck in that area. Overall, we think a small upward bias, and then maybe some more correction out there in a couple of weeks. So just in the short term, we think that it is likely to get some potential upside movement in here. And again, our upside target is about 1300 on the gold market, and we do think that intermediate bottom is forming in there. So we talked about that in Futures Speak, so if you haven't seen that, go look at it, our Wednesday segment that we do on the futures market. So now we're going to switch over here and look at the euro currency /6E. And get in here and look. Here's what we expected for the euro currency. We thought it would rally. Now, we thought it would get into the 109.87 to 110.30 level, and that this resistance area actually was moving a bit lower. So we actually did get some upside movement. It's gotten up into that zone that we expected that the rally would come. And then what we saw happening is that this news came out, and that the dollar got sold on that news about the new probe, and then the euro picked up some more. So what we thought was going to happen was that we would get a rally and that it would roll over. You see that pattern right there? Well, it didn't really have enough time to roll over. So it came right into the zone where we thought it would be a sell area. We still think that's the case. So we think, again, that we're going to say that it's going to stop in this zone 109.87 to 110.30. That's right in here. And that it would likely then move over, roll over in there and move back to the downside. So that is what we're looking for on the euro in there. We're going to call a down week in the euro coming up. Now the bond market /ZN, this one did almost exactly what we thought. We thought it would get into this resistance zone, that was the sell area between 130.12 and 130.20, and you could see that it popped up right in here. That's when we put out our short setup recommendation, and then what happened was that market fell very hard in here. Got a little bit of a pop here as this decline came in the stock market in the afternoon, and it was down earlier in the day. So what we're looking for now really is the same story, though the resistance levels are moving lower. So we're expecting still that rallies fail, that any rally is a selling opportunity. And we think that the potential for the S&P 500 falling, which I will show you in a couple of minutes, does set up a pretty good potential for getting a trade-off somewhere in this area. So our sell zone in there is 129.27 to 31. Which is 10 to 14 ticks higher than where it is right now. That's not very much in there, and we think if it gets in there, then it would be the potential. If the stock market sells off more, then getting to the top of the slim ribbon is a possibility, which would take you a few ticks past there, but I don't think that there is the potential for a lot of upside in there, and we are still selling. Note the 618 fib extension down right over here, which was kind of a short-term downside target. So we're still selling upticks in here, and as far as the ZBs go, that zone is 113.14 to 163.14 to 163.30 in the ZBs. We think the same thing is that rallies in the bond market will bring continued sell-offs. Showed you the world bond market. Not surprised if we get some kind of a bounce in there, especially if equity markets start to get sold. But I don't think that it could last in there at all. All right, so the stock market has been deteriorating. Besides the fact that it got sold today on that FBI probe news, the Russell 2000, as I said, has really deteriorated. And on Wednesday, I showed the askSlim market condition indicator on the indexes, which really shows the internal deterioration in the markets. The NASDAQ still quite strong, though rolling over, and some really horrible readings in the Russell and in the Dow, and the S&P getting worse. So that says to me that there's trouble out there for the stock market. And when I look at the short-term pattern in here, it really tells me that there's trouble in the stock market. We believe that patterns have weakened. Now, what we said in the last week was we thought that the S&P 500 would fall and then rally. And it actually fell pretty nicely, but wasn't really able to put on much of a rally at all in the period that we thought it was going to be able to happen. So let's take a look here, and I'll show you what I mean. We tried to get a rally at the end of the week, but then this news really hurt it. Let's take a look here at the S&P 500, the daily patterns in here. So there's a really outstanding cyclical rhythm going on. You can see it right in here, right? Rally, sell-off, you see that? So it matches this. I'm just drawing it in the middle. Rally and a sell-off, you see that? That's these right in here. So I'm showing you the cycle rhythms, and they match up with the cycle brackets on the bottom. This is the rut, and this is the S&P 500. So there you see the rhythm. Now, this is the last one right in here that you can see right there, and it gave you this bottom in here, the rally that came. And now breaking down, with the Russell having already broken down, that is a horrible pattern. So what we're set up for here, and I've got a lot of analysis. I'm trying to blow this up enough for you to see what we're looking at here. This is the low of this pattern right here. It rallies and then sells off, and then rallies and then sells off. This all points to lower over the coming week. And then another rally in here, a little one, and then another big sell-off after that. We believe that we're now establishing a downward stair-step pattern that will be pretty significant here and potentially take you down under the 2100 level, or lower, significantly lower than that, to our original target of the 5% correction around 2083. So this is a bad pattern that we're looking at. The market is trying to hold in here as we're doing it coming to the end of the day on Friday, but we think this is an important action that we've seen in here, and that we're likely to get below this danger level right there, which would be a breakdown under the 2115 number. I would say that this week we're going to make the bold call, say it gets easily under that 2114 number, and then a pretty sizable down week. Now, for the VIX last week, what I said was that I thought it would dip under 13, but then that was a buying opportunity, and it would get. I posted this chart out about that would rally up through election time. Well, man, look at this. It gets down to 1270. And then explodes on the upside. I'm going to call pop up in here to the 18 to 20 area or more over the next week, and maybe even much higher than that over the next couple of weeks. As we get up into this election, you can see it gets way above the projected angle of increase that we have in here to look more like this. So maybe it does a lot more than that as we get up towards the election time. We're in this rising phase right over here, which matches the declining phase I just showed you in the S&P 500, which says that it's suggestive of the fact that there is going to be higher prices for implied volatility for the VIX and lower prices for the stock market. That is it. Brought you everything. I hope that short-term view had something in there for you, and that the whole show would bring you some good ideas and opportunities. Don't forget, go to the website, go to the bottom of the front page, click on the puzzle piece that says 5 Essential Building Blocks to Successful Trading. It's the most unusual workshop you will ever take, and it will enhance your life and your trading. I know you will find it valuable. I hope you have a great, safe week. The news is going to be unbelievable coming out over these next days, and we're always wishing you great trading.
Well, I'm going to sit and